I want to discuss one of the most prevalent lies you see from the Democrat Party, and that is about the 2017 Tax Cuts and Jobs Act, or otherwise known as the Trump tax cuts. And while the Democrats continue to press the false issue that this was a big tax cut for the rich, it actually was not. In fact, depending on what state you live in, the higher income people, particularly those but the rich, I'm presuming people with incomes above $500,000 or more per year in terms of ordinary income, those people actually may very well pay more taxes because of that. And whereas those in low tax states, low income tax states, that is to say, a Texas or a Florida, so forth, those people will get a tax cut in their aggregate federal and state taxes together. The other aspect of this was that the great reduction in the deductibility of state and local taxes. However, the standard deduction was significantly increased to counterbalance this for most people. So actually, for the typical middle income earner, it actually is a significant tax cut. That's totally a distortion what you hear. And I'm particularly annoyed that the Republicans for years have not really pointed this out. They just seem to think everybody's going to know this. But I don't think they all really have internalized it, if you will, that that's the case. They may have at the time it first happened, but after that you kind of just take it for granted. And in fact, these rates are going to expire in the next presidential term here. So if they're not renewed, people are going to get a tax increase at the lower income levels. Okay, let's look at a couple other aspects of it. The capital gains aspect is a cut, but let's consider also that is the objective to take money away from people, or is it to raise money for the government? And I think, in fact, that they actually are raising more money from capital gains after this change than it was before, because there's been more activity that was generated by the lower tax rate. This is sometimes referred to as the Laffer curve, and of course the ideal idea, if you're trying to maximize your income, would be to go to the optimal point of the tax rate for that purpose. And finally, we get into the area of things like the corporate tax cuts. Those are a net deficit to the government. However, the characterized as just for the rich. After all, they also are designed and do help create jobs and more investment, which stimulates the economy, which was the purpose of doing that. And I think we can say pretty much it was working very well. And the only negative really that hit was the fact that the COVID event occurred, which messed everything up and basically damaged the fiscal picture of that time period massively. And we could get into a lot of wasteful spending that was done during the COVID period. But before that, the real policy and the rates themselves were good for the economy, good for creating jobs, which helps the poor also. And the middle class. And remember that the middle class, if they get jobs, they will be paying taxes. So that's an offset to some extent for the corporate cuts. In fact, the actual corporate taxes themselves are a fairly small amount of the overall revenue the government brings in, actually. So I think I just want to clear that up and explain this. So when you hear the Democrats talking about that the Republicans did the cuts for the rich and that they're going to do something for the middle class, don't believe it.